Welcome. It is March the 1st, 2018 here. I wanted to throw out a quick video to everybody today because on Monday we went over a potential odd New Zealand setup that was coming. Again, keep in mind I just said Monday. It is Thursday, the setup on Wednesday, so you had about 48-hour notice of this trade setup. When it comes to swing trading, you can often set your orders and such, far ahead of time. So the market will give you a really big notice when it comes to the higher time frame. So you're not sitting at your computer all day, which is one of the beauties of swing trading. But anyways, this is a setup. This is the type of setup. Typically, I usually do CRT reversal trades, which is a proprietary method that I created. But I will use some trend trading strategies, and I want to go over this. This is going to be in the brand new course, which is going to be coming out in the month of April 2018 here. But I go over things like this in the course. This had an unbelievable amount of confluence, and that's why I wanted to go over this trade setup, because it was so blatantly obvious that this thing was going to drop. It was unreal. I would give this probably about a 90% chance of working out, and it has worked out. It did come just a little bit shy of the level that I was watching the trade, so I don't have a right to brag here, but I did want to show it to you because if you can spot confluences like this, you will be a winning trader. Something with this much confluence is very, very, very unlikely to fail. But again, you have to be looking for these and you have to know what to look for. So that's why I'm throwing out this video to you to help you out a little bit here. So odd New Zealand. This is the trade that I'm watching. First of all, you can see that we created a top up here in the odd New Zealand at around 100 and 100, $1.13, and we've just dropped all the way down here. The key in this right here is this. You can see this is my momentum indicator that I use right here. You can see with each push up, let's take a look here. This push up right here, the momentum was still dropping. This push up here, momentum still dropping. This push up here, momentum still dropping. Even this push up to here where we reversed near the 108.50 level, momentum was still dropping. So when you see momentum dropping and you are in a down trend, what should you be doing? You should be looking to sell in this market. So you want to look for high quality sell signals for this currency pair. And so that's exactly what I did on Monday night. Every Monday, I go through my charts, look at the monthly, weekly, daily, 4-hour, and often even the 1 hour and 30-minute time frames to see what I can find in the market. And this was one thing that I was seeing in the market on Monday night, and I said to myself, I have got to show people this. So I did post this up on the Trade Alerts page on Facebook, and I also went over this in the webinar on Monday night for the premium group. So I wanted to show you what I showed them, and then I want to show you the outcome of this trade. So what I'm looking for, again, like I said, because of the momentum on this chart being to the downside, in other words, these lines are still dropping and they're still red. So on pops, I'm looking for a sell as long as this continues to fall and as long as this continues to remain red. So weekly time frame, what I'm seeing here, this is the coral right here. Anytime you break the coral, it becomes resistance because this is a support or resistance line. You can see oftentimes when the market comes up into this moving average, it will reverse. Does that mean that you should buy every time we come down into it or sell every time we go up to it? Absolutely not. This is just one indicator that is a good gauge of the market and a good area of support and resistance. So having said that, you need to be watching this area for reversals. And you can see it like, here's one example. We came up to it here and we reversed off of it. We broke through it here, reversed off again, reversed off again. And then if you continue to follow it over, you can see we're reversing off of it again right here. So it is a common area for reversals to happen. And you're going to see here, this is the bands that I have on my charts. Anytime you see, especially in the higher time frames, a retest of the coral and you have a first touch of the band present, that is a huge, and I mean a huge indicator of a reversal. So this setup alone right here on the weekly time frame, momentum down, retest of the coral, first band upper or first touch of the upper band. Anytime you see that, that is a very high quality sell signal. Just based off of that alone, I would say about 80% of the time, it's going to reverse off of that level just on these two confirmations right there. But for me, that's not enough. I need at least 90% because I'm a very, very, very picky trader because I do not like to lose. So I'm looking for additional confluences on top of the coral and the first touch upper band on the weekly time frame, and of course momentum. So what do? I always go to the other time frames. So the first thing I want to do is look at the higher time frames. You can't go much higher because we're already on the weekly. So monthly, what is that telling me? Obviously, the monthly is very, very negative too. We came up to here, and now we are rolling over. So the monthly time frame is also bearish, so that's a very good sign. So those two time frames are in agreement. By the way, even if this was not in a downtrend and we were not having negative momentum here, I would still be willing to take this trade because of what I saw on the other time frames. So if I go down to the daily time frame, what do we see here? Well, first of all, you're going to notice this solid red line that I put on here at 108.50. Why did I put that on there? Well, first of all, I put it on there because it was the first touch of the upper band and the coral. But additionally, you have a double bottom here. We popped off of it. We came back down to retest the double bottom. We popped again and again and again. Finally, after 1, 2, 3, 4, 5, the sixth try, we finally broke down, and then we came back up and retested it. Pushed down again, created this sort of a double top, and then we collapsed down about 200 pips. Then we reached the bottom here, and then this was the area that I was looking for a short on. Again, it's the upper band, first touch, and the coral on the weekly time frame. Additionally, this support is broken, so now it becomes resistance. But there's more. If you look at these bands right here, or these moving averages, this is a major, major, major deal. Anytime you come down into these moving averages, you have to watch for reversals in the market. Because this moving average you can see right here, EMA 800, this is a huge area for reversal. So you can see it bounce down here, 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 here. So now we're coming back up into it. So again, you've got broken support, you've got the 800 EMA on the weekly time frame, you have the coral, you have the upper band. On top of that, you've got this coral right here. And again, you can see the coral is often support or resistance. We bounced off it here, bounced again, finally broke below it, became resistance, became resistance, became resistance. And so here we are coming back up into it again. Again, you have to have more than, you can't just take a short because you have an 800. You cannot just take a short because you have an upper band. You cannot just take a short because you have a coral. You have to have several of these things at the same time, at the same level. If that happens, your chances of winning are going to be huge. So again, we've got like 4 or 5 confluences so far, correct? Okay, great. We've got the 800, we have broken support, we have coral. On the weekly, we have the upper band, we have the coral. All these things are working in our favor, and they are here to stop price. Additionally, though, you're probably not going to see this. This is why I really want to point this out. Most people do not know how to draw trend lines properly, and so I wanted to kind of go over this real quick. There is absolutely a trend line right here. A lot of people are not going to see. In fact, I could probably draw it down. Let me push it down just a little bit lower. There we go. When you are drawing your trend lines, you need to draw them based off of the wicks and the candle tops and bottoms. By that I mean the open or close. A lot of people don't understand that, so they're going to draw their trend line like this. This right here, my friend, was a fake out in the market. So you ignore these. Again, if you draw your trend line like this, what is it telling you? We hit it here. We tried to hit it here, came a couple pips from it. Again right here, again right here, again right here. We came down, we hit it, pulled back briefly, we broke through it, collapsed down. And so you need to draw your lines where you are seeing the most reversals in a particular area. So in this case, we had 1, 2, 3, 4, 5, and now we're coming up again. If you draw it right here, you've got 1, 2. So obviously, I'm going to be taking paying very close attention to. Let me, if I can actually grab this here. I'm going to be paying very close attention once again when we come up into this region, because this has been a very solid trend line over and over and over again. I do want to say if this would have came down here and popped all the way up here, that would have further enforced my trend line, but we didn't quite make it up that high. But again, you need to draw your trend lines based off of the wicks and the candle closes and opens and where it's being hit the most amount of times. You could probably draw one right here as well. You had support here, support here, broke down below it. Or you could perhaps have drawn it right like that. Again, you're connecting your wicks or your candle bodies is what you're doing here. So you can see here we bounced here, we bounced here, bounced here, bounced here, consolidated a little bit here, broke below it. What happened? We came back up to retest it. This was a structure level right here, which I go over in the structure course. Big deal. Not only was it a structure level up here, but you also had the coral up in here, and you had this broken trend line which was being retested. And so obviously this is going to be magnificent resistance up here, and you can see the after effect here, it went from 111 all the way down to about 108.75. So you had over 200 pips of downside off of this. Again, confluence, guys, is everything when you are trading. But again, to go back to this, we had a candle top. We came darn close to the wick here, close to the wick here, came again here and here. Again, anytime you're trading, whether it's off of support and resistance areas or off of trend lines and all that, remember the market moves in regions, not in exact levels. A lot of people are going to dismiss this because we didn't hit it to the exact pip. But that's not how the market, again, the market works not just on levels, but in regions and in zones, and you have to understand that. So when it comes down here, I'm looking for this particular region for reversal. Same here, right here, right here. I mean, in this case, it came up just about to the pip, but it's not always going to be like that. So you have to watch your trend lines. You have to watch those zones, those regions, So, but anyways, this trend line here, we had a top here, 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 and then we're looking for a top right here because it has acted as resistance in the past. So you have a trend line, you have broken support, you have a coral, you have the 800 period moving average, weekly time frame, you have the coral, you have the first touch of the upper band. There is so much saying sell this. It is absolutely ridiculous. So you should be looking for a sell in this zone where my cursor is at right here. But again, this is the daily chart, and then this is the weekly chart, and you have confirmations on both. Is there anything on the 4-hour time frame that is saying sell? Anywhere between, well, the top was right here. I'm going to draw a line on the top so you can see why it reversed where it did, by the way. Whoops, we don't want to do that. So you have this right here. Again, 108.50 was the area that I was really watching. It reversed at 108.30 approximately. But again, it could have went up to the coral or to this trend line right here. And again, keep in mind, sometimes the market will spike through here and then come back down. So there's nothing saying this couldn't have gone up to 109, 109.25 or something. But anyways, 4-hour time frame, what do we have here? Again, another 800 period moving average right where this trend line was. So this market would have had a tremendously difficult time breaking through the 108.75 level again. But my level was 108.50. up into this trend line. So on the 4-hour time frame, you have even more resistance up here. So again, you have two forms of confluence on the weekly. On the daily, we have this, we have three things on the daily. Going to the 4-hour time frame, you have another thing on the 4-hour time frame. And ultimately, again, like I said, we reversed around 108.30. Why did it reverse there? If you look at the H1 time frame, we came up into the major moving averages and we have sold off since then. It is absolutely showing signs of a near-term reversal at the moment, coming down to this major support where we saw this magnificent run up. But I wanted to make this video because, again, I want to show you the beauty of swing trading is this. You can look at things and spot levels and trade ideas and things several days in advance, so you don't need to be at your computer nonstop all the time. And if you're working with the weekly or the monthly time frames, which sometimes I do, for example, it was not too long ago, I was actually, let's see, where was it at? This right down here. I was looking for a long setup. This is a structure type trade, which again I define in the structure course. But this down here, I had warned my group about this. Gosh, it was many weeks in advance. I said, if we go down into these levels down here, this is an absolute buy in the market. And you can see that we did rally up a couple thousand pips from that. But again, I just point this out because, again, I want to show you, anytime you're swing trading looking at higher time frames, you're going to know way ahead of time. You just have to put in the time to analyze the actual market here. But again, going back to the odd New Zealand here, so you can see that we had a ridiculous amount of confluence up in this area. Again, because of so many things, there was almost no way this wasn't going to work out. But we've dropped from 108.28 all the way down to the low here is 106.81. You're talking about 150 pip drop here, so you're definitely into your target zones right now. But I just wanted to go over this because I know there's a lot of people that watch all kinds of crazy training videos on YouTube and other platforms, and they're been given a method, and a lot of times I'm always getting inundated with people messaging me on Facebook saying, hey, I'm losing money, my method doesn't work all the time, what do I do? And so I promise you, if you can stick to higher time frame trading like this, and you can find areas that have loads and loads of confluence, whatever your method may be. The reason why I use the bands, the coral, broken support, trend lines, the 800, all this, the reason why I use those because I find these to be the most accurate. They're the most accurate things that I found. I don't use Bollingers. I don't use a lot of this other garbage because I didn't find them accurate enough for me. So, but this fits my personality. This is something that I developed that works for me, and that's why I use all these as confluences. So, if you're struggling with trading, stick to the areas that have tons of confluence or the levels which are massive brick walls. You don't need to be trading all the time. You don't need to have a trade on constantly. You don't need 10 trades a day. So make sure that you are, being a little stricter about your entry criteria and you're finding the best setups. It'll help you a ton. But anyways, I want to wrap this up. But as always, if you have questions on this or you're interested in the new course where I'm going to go over this in much greater detail, and my CRTs, of course, feel free to hit me up, and I'm more than happy to help you. Or even if you're not interested in that course and you just need some help, or you got some questions for me, or you need some guidance, feel free to message me. This is what I do, and I love to help people. So hopefully you got something out of this, and I'll have a new video coming at you soon. Thanks, guys.